Amabolowe. On today's episode of the Double Entry System of Accounting, we'll be looking at questions. And today's episode is going to wrap up, it's going to be a wrap up on Double Entry System of Accounting. So if this is the first time you are watching this session on Double Entry System, go and watch the first and the second episode. And this will seem much easier for you to understand. So today we are going to be completing the double entry for this list of business transactions. And there are some little differences between these questions and the ones we solved in the last episode. So let's begin. And basically, what double entry system of accounting, is all about is we are going to be debiting and crediting in a transaction like we have established. That's why I said you have to make a reference to the previous episode we've had on the double entry system of accounts. So let's solve. The following business transactions were obtained from the books of peace. So these transactions were entered into by peace business or enterprises. And what we're asked to do basically is to complete the double entry for the above transactions and extract trial balance. So let's start. Let's start. So let's divide the board so that we'll be able to uh, manage the board. So let's start. So the name of the business is Peace. So we have in the books of Peace. So in the books of Peace, that's where we want to record all these business transactions that we have. So let's start. The first transaction here started business with 10,000 naira cash and private owned car 30,000 naira. So there are two independent business transactions here. He started the business with two things, cash and car. And I did say in the previous episode, I'm referring to the previous episode now. Anytime you are given started business, the first account you are going to open is capital account. Then the second account will be what the owner starts the business with. And in this regard, it's starting with cash and car. So also, capital account will be credited, sorry. Capital account will be credited and the other accounts will be debited. So capital account will be credited and cash account will be debited as well as the car account or asset account. So let's open capital accounts and we're going to open cash as well as car accounts. So capital accounts, I think I need to use a blue mark. So we have capital accounts, that's capital account. So we have the credits, we have the debits. So we are going to credit the capital account. Then the corresponding debit entry will go to cash as well as car account. Very simple. So the date of the transaction is 1/11/01. Then we have the particular with which you start the business. The first is cash, and that's 10,000 naira. Then the second with which you start the business with uh, is car. Then the same date we have 1/11/01. That's car now, and that's 30,000. So the corresponding debit entry of this will go to cash as well as car accounts. So let's open car and cash accounts here. So let's say we have cash accounts. I'll be shortening it so that I'll be able to manage the space. So the corresponding debit entry of this credit entry will come in. So the same date, that's 1/11/01, and that's the corresponding account, which is capital account. So we have capital. Then the amount is 10,000 for cash, it's 10,000. Then also in the cash account, we are going to debit it. So car accounts now, the second car accounts. So we have car accounts. Car accounts. That's credits. Then we have debits. So we are going to debit it, and the date is 1/11/01. Particular will be capital because we are recording from the capital account. So that's 30,000. That's that. So it's starting the business with cash. That's one transaction, capital and cash account. Then the second account is starting the business with car. That's capital and car account. So capital account, we don't need to open two capital accounts or separate capital account. Anything that has to do with the owner starting the business will be recorded in the capital account. So that's all. And we have opened cash as well as car accounts. So I hope that is understood. And don't forget, capital accounts will always be credited, and the corresponding debit entry will go to the items with which the owner starts the business with. So he's starting the business with cash and car. So that's that. So the next we have, that's 3/11/01. Bought goods by cash, 3,000, and credits 5,000 from Joy. Two independent business transactions here now. The first is bought goods by cash. Let's treat that first. Each time you have bought goods, the goods is not specified. The type of goods that was bought is not specified. You represent it with purchase. The account will be purchase account. And with what the goods was, the form in which the good was bought, that's cash. So the second account is cash. So purchase account will be debited and cash account will be credited. So we are going to credit cash and debit purchases account with 3,000 each. So since you have opened cash accounts, we don't need to open another cash account. That's what that means. So we are going to credit cash accounts. Let's credit it. The date is 3/11/01. The particular is going to be purchases. So that's 3,000. Then the corresponding debit entry will go to purchases account, which you have not opened. So let's open a purchases account now. So we have purchases account, purchases, purchases account. I'm shorting it. That account, the short form of account is here. So I've shortened it, account. So let's debit purchases account. The date is 3/11/01. Then the particular will be cash. That's the form in which you purchase, and that's 3,000 naira. Always put your naira sign in every account, because of the money measurement concept, which states that for the purpose of accounting, for the purpose of recording in financial accounting, all financial transactions must be quantified in monetary terms. And the unit of currency used must also be stated in that same transaction. So any account you have opened, you must indicate the unit of currency that is used in that business transaction. So we are given naira here. That's why we are putting naira here. If you are given dollar, you put dollar. If you are given pounds, you put pounds. If you are given Ghanaian cedis, you put it there. So that's basically that. Then the second transaction on this same date, that's bought goods on credit from 5,000 from Joy. Who bought goods? Peace. Peace Business bought goods on credit from Joy. That means Joy is the supplier, is giving Peace. So Joy is giving, Peace is receiving. Now, which account is going to receive that goods on behalf of Peace Business? That's purchases account, because it was not specified the type of goods that was purchased from Joy by Peace. So we represent it with purchase. So the two accounts here is purchases account and Joy's account. So Joy is giving, she's a supplier. We credit Joy's account and we debit purchases. So since we have not opened purchases account, we have not opened Joy's account, sorry. Then we open Joy's account, credit it, and we debit purchase account. And since we have already opened our purchase account, we don't need to open it any longer. So we have Joy's account, Joy's account, Joy's account. So we are going to credit Joy because Joy is giving. And you all know from the double entry rule, we said double entry rule states that debit the receiver and credit the giver. Any account that is giving must be credited, and any account that is receiving must be debited. So their Joy is giving here, so that's why we are crediting Joy. And purchase is receiving that goods, so we debit purchases. So the date is 3/11/01. The particular, what did we buy? That's purchases. Then that's 5,000 naira. You put your naira sign, very important. For every credit entry, there must be a corresponding debit entry. That's in purchases account. We are still falling back to the double entry principle, which states that if you are debiting one account, you must credit the other account. Or if you are crediting one account, you must debit the other account. That's double entry principle. And it's the summary is just for every debit entry, there must be a corresponding credit entry. And for every credit entry, there must be a corresponding debit entry. So let's debit purchases now. The same date, that's 3/1/11/01. 3/11/01. That's the particular is Joy, because it's from Joy that we are purchasing. And that's 5,000. So that's that. Then the next, that's 9/11/01. Paid for postage stamp 150 by cash. Fees paid for postage 150 by cash. So postage was being paid. That means postage is receiving. Who is paying postage? Cash. So postage is receiving. Every receiving account must be debited. And who is paying postage? That's cash. So cash account will be credited. So we have to open postage, but we don't need to open cash because cash account has been opened already. So let's open postage account. So we have postage accounts, and we have credit, we have debit. So let's debit postage because postage is receiving. Every receiving account must be debited. So the date is 9/11/01. Then the particular is going to be cash because postage was paid for by cash, and that's 150. Then for every debit entry, there must be a corresponding credit entry, and that's in cash account. So let's credit cash now. That's the same date, 9/11/01. The particular is postage. That was what we paid cash for, and that's 150. So we paid postage by cash. That's what it means. Then 15/11/01, settle the account of Joy, receiving 2% cash discount. Now, the examiner is referring you to the previous transaction, which had occurred. So what this means is that Peace bought goods from Joy on credit here. That's 5,000. Now, Peace is now paying the account of Joy. So that means Joy is receiving now, and Peace is giving Joy. And which account is paying Joy? Is the cash account of Peace Limited. So Joy is receiving, Peace is giving or paying, and the account that is paying on behalf of Peace is cash account. So cash account will be credited and Joy's account will be debited. Now, one thing we have to pay careful attention here is let's calculate the discount that was uh, allowed to Peace, by Joy, or that Joy gives to Peace as discount. So let's calculate that 2%. So 2% of 5,000 naira. Excuse me. Let's calculate that. So 2%, that's 2% means 2/100 times 5,000. So 2% means 2/100 times 5,000. That's 100 naira. So 100 naira is the discount that Peace received from Joy for buying goods of 5,000. She was given 2% discount. So the actual cash that Peace settled Joy will now be that 5,000 naira minus this 100 naira, and that will give us, that's 5,000 naira minus 100 naira. That will give us 4,900. This is the actual cash that Joy received from Peace, but the discount is 100 naira. So everything now sums up to 5,000. If Peace had not been given 2% discount, Peace would have paid 5,000 naira. altogether, or like the whole money. But because Peace was allowed or received discount of 2% from Joy, which is 100 naira, then the amount that Peace paid now is now 49 instead of 5,000. So discounts will reduce the amount that a buyer had to pay. That's why we said discount is the reduction in the invoice price of goods and services allowed by the seller to the buyer, perhaps to encourage prompt payments, customers' patronage, uh, and so on and so forth, to reduce the occurrence of bad debts and all that. But we're going to talk about discounts as a topic in our subsequent episode. So if this is the first time you are watching our video, please do subscribe to our YouTube channel, spread the knowledge for others to also, be beneficial or benefit from this video. So 100 naira is a discount. Then 4,900 naira was what was paid to Joy. So the cash is paying Joy now 4,900, and Joy is receiving it. So we are going to debit Joy and credit cash account. So let's credit cash account now. The date is 15/11/01. So Joy was being paid 4,900. Then since Joy is being paid, we are going to debit Joy because Joy is receiving. So the date is 15/11/01. So who is paying Joy now? Is cash. Then the amount is 4,900. And don't forget, Joy allow a discount of 100 naira. So that discount will also reflect in Joy's, the same date, 15/11/01. We also reflect in Joy's account. That's discount received of 100 naira. So this 100 naira now that was allowed as discount to Peace will reflect in Joy's account as a debit entry. Then this will also reflect in discount receive account because this is the book of Peace. So to Peace is discount received. To Joy is discount allowed. So it will be discount received there, but when you are to Peace now, it will be discount allowed. Discount received, sorry. To Peace, it will be discount received, but to Joy, it will be discount allowed. So let's open discount receive account. So we have discount received, discount received, discount receive account. So credits, we have debits. So discount received is an income account. So the corresponding credit entry of this will come to discount received. So the same day, that's 15/11/01. Then from whose account? That's Joy. And the amount is 100 naira. That's what we have. Let me rephrase that again. Settle the account of Joy. Who is settle the account of Joy? Peace. Settled means paid the account of Joy. So Joy is receiving, Peace is giving. And which account is paying on behalf of Peace? That's cash. Because we are not told the form in which Joy was settled. So we assume it to be cash. Then Peace was allowed discount of 2%. So 2% of 5,000 naira. That's 100 naira. Then that 5,000 naira minus 100 naira gives us 4,900. So that 4,900 is the actual cash that Joy receives. And the 100 naira difference is the discount, which was received by Peace, but allowed by Joy. Very simple. Then the next, 18/11/01, paid wages in cash. Paid wages. Wages is being paid, then cash is given. So we debit wages and we credit cash. So since we have not opened wages, we open wages account and credit cash account. So we have here wages account. Let's open wages account. So credit, we have debit. So let's debit wages account. So the date is 18/11/01. Particular will be cash because wages was paid by cash, and that's 300. Then for every debit entry, there must be a corresponding credit entry. Sorry. For every debit entry, there must be a corresponding credit entry. And for every credit entry, there must be a corresponding debit entry. So the same date, that's 18/11/01, the particular is wages, which was being paid for by cash, and that's 300. Then the next one, we have sold goods on credit to Azizat, a customer. Who sold goods to Azizat now? That's Peace. To on credit to Azizat. So the goods that was sold to Azizat is 1.5. And what that means is that Azizat is being sold to. That means Azizat is receiving and Peace is what? Giving. But which account will represent Peace? A sales account. So the two accounts here is sales account and Azizat's account. So Azizat's account will be debited because it's receiving. Then sales account will be credited because it's giving. So let's open sales accounts here. Let's open sales accounts. Let's manage the board. So sales accounts, we have the credits, we have the debit. So sales account will always be credited. And we already said here that Azizat is receiving, it will be debited. Then the corresponding credit entry will go to sales account. So sales account, the date is 24/11/01. Then the particular is going to be Azizat, to whom we sold to Azizat, and that's 1.5. 1.5. Then the corresponding debit entry will go to Azizat's account. So have we opened Azizat's account? No. So let's open Azizat's account here. And let's try to open it here. So, excuse me. So Azizat's account. So Azizat's account. So credit, debit. So we are going to debit Azizat because Azizat is receiving. So we have the date to be that's 24/11/01. Then the particular is going to be sales and the amount is 1.5. 1.5. So you put an error sign on both sides. So that's with respect to that. Then the last but not least, Azizat set to her account after deducting 5% cash discount. So Azizat is paying now. Is paying Peace. She pays Peace. So paying Peace now means Peace is receiving the money, which is cash. We are going to assume it to be cash. So Peace is receiving, and since Peace is receiving that cash, the cash account will be the receiving account in that regard, not Peace. It's cash account because Azizat paid by cash. So we are going to debit cash and credit Azizat. That's that. Now, we're told also here that Azizat was allowed 5% discount. And don't forget, the examiner is also referring you to this amount, which was the value of the transaction or of the goods that was sold to Azizat, which is 1.5. So we have to calculate 5% of that 1.5. Let's calculate that. So 1.5, that's 5% means 5/100. That's 5/100 times 1.5. Then whatever you get is your discount. So 1.5 times 5/100. That gives us 75 naira. This is the discount that Azizat enjoyed. Then the actual cash that Azizat paid. Now, let's get that. And that will be 1.5 minus 75. So we have 1.5 minus 75. That's 1.425. So 1.425 was the cash that Azizat paid. Then that will be debited into cash account. Then we are going to credit Azizat's account. So let's debit cash account. So that's the date is 29/11/01. Then who is paying now? That's Azizat. Azizat. And how much did she pay? 125. Not 1.5. Is the actual cash is 125 because she had been allowed 75 naira as discounts. So This is the cash that we received, that piece received from Azizat. Then we will now have to credit Azizat because she's paying now, she's giving. Every giver must be credited. So let's credit Azizat now. That's 29, the same date, 1101. Particular will now be which account is receiving. That's cash. Then 1425. Now, the discount that Azizat was allowed or that Azizat received, which is 75, will also be reflected in Azizat's account. So that's the same date, 2911 1101. That's discounts allowed of 75. Then these discounts allowed will also be reflected in discounts allowed accounts. And discount allowed is an expenses. It will always be debited. So what we have here is the corresponding debit entry of this discount allowed in discount allowed account will be reflected. So we have, let's open discount allowed. So discounts allowed. So we have credits, we have debits. Most times you don't need to put accounts, but because we are still at the beginning, we are still doing the beginning of the thing. So that's why we're trying to debit, credit, put all those that you need to, know just for you to understand. So let's go. So discounts allowed. The corresponding debit entry of this, we put it here. So we have the same day, that's 29 1101. Then the particular will be Azizat. Azizat, and the amount is 75. So that's with respect to that. Let me do a brush up on this. Azizat settled her account. Azizat paid. That's what it means. Settled her account. That means paid. And who is she paying? Peace. So Peace is receiving. Which account will receive that money on behalf of Peace? Or a Peace in the book of Peace? That's cash account because Azizat paid by cash. So Azizat is giving. So Azizat account will be credited. Then the discount that Azizat was allowed was 5%. So 5% means 5 over 100, which we have done here. 5 over 100 times the amount or the value of the goods that was sold to Azizat, which is 15. So we got 75. That 75 is the discount that was allowed to Azizat. Then the actual cash that was received from Azizat was 1425. That's why you see it reflects in cash account. Then Azizat paid this cash. Then the discount to make this, because ordinarily Azizat ought to have paid 15, but because of the discount that she was allowed, she's not paying 14250. That's what we have it. Then the discount has to be reflected in our account, which is 75. So I hope that is understood. Good. So haven't completed the double entry for this list of business transactions. Then let's balance the account and extract our trial balance. So let's start with the balance. Balancing an account, I will refer you to our previous episode. So balancing an account is very easy, very easy. It's easy peasy. Balancing an account means you want to make the two sides equal. So here now, we do not have any, for capital account, we do not have any figure here. But here we have total of 40,000. That's for the credit side. We have 40,000. Then nothing is here. To make the debit side equal to the credit side here, we put 40,000 here. And that 40,000 is the balance carried down, is the difference between the two sides. Then that balance carried down is what to make this debit side to be equal to this credit side. And for every balance carried down, there must be balance brought forward or balance brought down. It's the same thing. Balance brought forward and balance brought down, they are the same. So you can either use either the two, any of the two. So let's balance this capital account now. So we have the closing balance is always the balance carried down, or balance carried down is always the closing balance. Then the new balance for the period is the balance brought forward. So here we have 31st is usually closing. That's at the end of the period. 01 balance carried down. So to make this side equal to this side, debit side equal to credit side here is 40,000. You put your naira and that's 40,000. Then 40,000. The two sides is now equal or are now equal now. So you close the account by writing two lines and they must be on the same level, on the same level. Then for every balance carried down, we said there must be balance brought forward, and that's the new balance for the period. So we have one. The next month now, the closing balance or the closing period was 11. Then we now have 12 now. 112.01 balance brought forward. That's the same balance carried down here. That's 40,000. Not the total, please. It's the balance carried down that will beat the balance brought forward. It's as simple as that. Let's balance the cash accounts now. We compare the debit and the credit total. Then we look for the one that is greater. The one that is less, we minus it from the one that is higher. Then we put the difference on the side that is lower. So this side now, I think we have 10,000 plus 1,425. That's 11,425. That's the total of this side. Then total of this side now we have 3,000 plus 150 plus 49 plus 300. That gives us 8,350. That's the total for this side. Then this side now minus this side. What do we have? So we have the closing balance, and that's 31st 11/01 balance carried down. That's the difference now. Is 3,075. 3,075. That's the total. Then when you add everything now, when you add all this, you are going to be having 11,425. You close it, then add this, bring this down to the same level, 11,425. Close it. Then for every balance carried down, there must be balance brought forward for the new period. Now that's 1/12/01 balance brought forward, and that's 3075, which is the balance carried down here. I hope that is set to good. So car now, nothing is here. 30,000 is here. So that means we have 31st 11/01 balance carried down. That's the same 30,000. Then you put your naira sign. For every balance carried down, close your account. For every balance carried down, there must be balance brought forward for the new period. That's balance brought forward. The same amount, which is 30,000. 30,000. Let's balance. Okay, Aziza, let's start from it. So Aziza's account is self-balanced. The two sides is equal. So there is nothing like balance carried down, balance brought down. So just total it. The total of this, addition of these two is 15. And addition, bring this down, that's 15. So there is no balance carried down. The Aziza's account is self-balanced. That's with respect to that. Then discounts allowed. Nothing is here, something is here. So 31st 11/01 balance carried down. That's 75. Then you close your account. For every balance carried down, there must be balance brought forward. That's that's 30. That's new balance now. 1/12/01. That's 75. Then for purchases, the total here, that's 8,000. Then 31st 11/01 balance carried down, that's 8,000. Then you bring it down, that's 8,000. You close it, draw two lines. Then for every balance carried down, there must be balance brought forward, that's 8,000. 8,000. Then let's balance for Joy. Joy's account also is self-balanced. This is 5,000. Debit to 5,000. So no balance carried down, no balance brought down. So it's self-balanced. This is what we mean by self-balanced accounts. The debit side is equal to the credit side. Then for postage, we have 31st 11/01. So we have balance carried down, that's 150. Then for every balance carried down, there must be balance brought forward. That's for the new period now, 01. The old period is 11, so the new period now is 12. That's the 12th month of the year. Balance brought forward, that's 150. Then discounts received now. We have 31st 12, sorry, 31st 11/01. Balance carried down, that's 100. Then for every balance carried down, we have balance brought forward as for the new period now, balance brought forward, that's 100. Then for wages now, we have 31st 11/01, balance carried down, that's 300. Then for every balance carried down, there must be balance brought forward, balance brought forward, that's 300, which we have here. Then for sales account, we have 31st 11/01, balance carried down, that's 15. Put your naira sign. Then for every balance carried down, close your account, write 2 lines. Then for the new period, balance brought forward, that's 15. So we have balanced all the accounts in the ledger. So now the next thing we have to do is to extract our trial balance. So let me rub up these parts to prepare that. So let me rub up these parts. So to prepare our trial balance is easy peasy. Now that we've balanced all the accounts in the ledger. So just a little aside, just what I did in the last class or last episode by explaining that all these you have here are accounts, and this that you have is a ledger, and ledger is one of the principal books of accounts that contains different transactions of a business organization. So in a ledger you find different accounts in it, and all these are each page of a ledger. Like Azizat account is a page, is on a page of a ledger. Discounts allowed is on a page of a ledger. Capital account is on a page of a ledger. So each balance in the accounts in the ledger will now be extracted and stated in the form or statement known as trial balance. And that's why most times we define trial balance as the statement that shows the list of debits and credit balances extracted from the ledgers. Or most times you can say trial balance is a schedule showing the list of debit and credit balances extracted from the ledgers. So if you want to extract your trial balance now, all you need to do is focus on the balance brought forward on each account or on each balance in the accounts in the ledger. So for example, now capital account, the balance brought forward here is what we are going to focus on when we want to take the balance and state it in the trial balance. So let's do that, so that all these that we have been saying will make a lot of sense. So trial balance now. Trial balance. Trial balance. So trial balance, we have the dates. Then we have the particulars, which is the same as details. Then we have the debits and we have the credits. So I shorten it debit credits. So we have the dates. Then we have the particulars, which you can also write as details. It's the same. Then the date. The date is basically, let's say, 1/12/01. That's the date, basically. Yeah. Because trial balance is usually prepared at the end of the period before you will now prepare your financial statements, which are statements of income and other comprehensive statements like that. Statements of financial position, statements of cash flow, or statements of changes in equity and all that. So those are the statements you will prepare from the list of your balances, which is trial balance. So let's start capital account. So capital. So the balance brought forward is what we have business with here in all these accounts. So capital, it has a credit balance, 40,000. Put your naira sign. So 40,000. And it's not enough question that will be given naira. At times, we may be given dollar sign, Ghanaian cedis, pounds, and all that. So please, it's not in all cases that you'll be given naira. So capital accounts will always be credited because it represents the owner of the business giving something to the business. So the owner always gives. And the account that is often recorded when the owner gives the business anything is the capital account. So capital account always gives, and that's why it has credit balance always. Then cash now, cash. Cash is an asset account, current assets basically, and all assets will always have a debit balance. The balance is 3075. The next, car account. Car is a non-current asset. Non-current assets are most times called fixed assets, and they are assets that have a lifespan of more than 1 year, and they are usually durable in nature. So they are classified as non-current assets. So all assets, they are debited. So the amount is 30,000. 30,000. Then the next, we have purchases. Purchases is an expenses account, and all expenses are debited. So 8,000. 8,000. Joy. Joy's account. Joy is a personal account, and it can either be debtor or creditor because debtor is a personal account as well as creditor. But depending on the transaction that was involved here with respect to Joy, or that Joy enter into here. So Joy's account is self-balanced. You can see there is nothing like balance carried down, balance brought down. The credit side is exactly the same as the debit side. They are equal. So no balance here. We are not recording anything here with respect to Joy. So it's self-balanced. So we move to the next one, postage. So postage. Postage is an expenses account, and all expenses accounts are debited. So we have 150. We have discounts received. Discount received is an income account. Discount received is an income account, and all incomes accounts are credited. So it will always have a credit balance. Then we have the next one, wages. Wages is an expenses account. Wages, they are direct costs. So they are expenses. So all expenses are debited. So that's 300. Then we have sales. Sales is an income account, and all incomes accounts are credited. So we have 15. 15. Then we have Azizat. Azizat account is also self-balanced. The debit side is exactly the same as the credit side. So we don't have any balance to extract and take to the trial balance or record in the trial balance. But we have the next one, discounts allowed. So discounts allowed is an expenses account. Discounts allowed is an expenses account, and all expenses accounts are debited. That's 75. So that's all. So let's uh add the two sides, both the credit and the debits, to see if they are equal. And if they are equal, it means that postings in the ledger is accurate. So the credit side, we have 40,000 plus 100 plus 15. That's 41,600 for the credit side. That's the total for the credit side. Then for the debit side now, let's add. That's 3075 plus 30,000 plus 8,000 plus 150 plus 300 plus 75. So that gives us 41,600. So that means the two sides is equal now. And simply simply means our recording is intact, because trial balance is basically used to test the arithmetical accuracy of the postings that have been made in the ledger. So what's like I usually say, what makes an accountant more happier than saying his account, intact, balanced? So this is where we are going to be drawing the curtain as regards double entry system of accounting. This is the last episode, and I hope you all enjoy and you've learned one or two things regarding what we've talked about in the first and the second episode. Please, at this juncture, I just want to acts of a favor, spread the knowledge, help spread the knowledge to people that this video might be of tremendous help. Uh, Without you being there, we can't be here. We promise to always be up and doing regarding releasing video every now and then to make sure that you all learn and pass your exams excellently. Refer videos to professional students, ICANN, that's the Institute of Chartered Accountants of Nigeria, to ATS students, that's Accounting Technician Scheme, to JAM students, to YX students, to IJMB students, and most importantly, to uh, students that are in senior classes, maybe SS1, SS2, SS3, and all that. We will gladly appreciate your support regarding you helping us to share our videos. Uh, what more can I say? Give our videos a thumbs up. Let's have your comments as regards what we've been doing here at Echo Plus Aboy. So without you know saying much, I wish you all a beautiful day ahead. I'll see you on my next video. Bye bye.